Are we on the brink of a stock market crash with the Bank of England predicting a big shock? What's up, homie? This is Howie. I'm a principal AI engineer with a PhD in physics. Welcome back to Howieverse, where investing is driven by data. In this video, we will discuss whether if the stock market is going to crash or not in 2026. Then I'm going to tell you what to watch out for if the market is going to crash, because this one indicator is the most important factor. Let's get to it. So first, we're going to discuss whether we are on the brink of the stock market crash in this article provided by the Bank of England. The first thing that it mentioned right here, it says the stock market is too high and will fall soon. And what has been driven the stock market in the past few years is that it's right here. What is behind the stock market growth? That they argue that the stock market growth has been driven by the US Magnificent Seven, like Google or Alphabet, Amazon, Apple, Meta, that owns Facebook and WhatsApp, Microsoft, Nvidia, and Tesla. So this company has driven the stock market up and has been holding it strong because this company has a really good earnings result, as suggests that the US economy, the world largest economy, remains strong. That is because this Magnificent Seven has been reporting a really good earning results. The elephant in the room actually is AI. The hype around AI has driven stock market gains for the past few years. Some fear the bubble could burst, but good financial results over the past year for the Magnificent Seven and other tech firms, such as the chipmaker Intel, mean many investors feel the hype has firm foundation. The thing about the AI bubble is that AI is going to cost a lot of money. And first, AI needs to build the data center. The data center is where the AI is going to operate. So, in order to build the data center, it's going to cost a lot of money. Not only that, after you build it, in order for it to operate day to day, week by week, and year to year, the data center is going to consume a lot of energy, and the energy has to come from somewhere. So not only that the initial investment that is going to be very expensive, also the operating expense for the day-to-day operation, it is also going to be very expensive because this data center are very power hungry. So when they're saying AI bubble, they're actually saying that, hey, this data center is very expensive. Is the investment of all of this expensive data center going to pay off? So if you look at Meta and if you look at Microsoft, the stock has been pummeled for since the beginning of this year because they keep spending their money into this furnace called AI, and there is no horizon where it's going to say that, hey, this AI is going to actually pan out. So the thing with this company that's spending not 1 billion, not 2 billion, they're spending hundreds of billions of dollars into this AI investment. And who is winning? Who is winning here is actually Nvidia, that gives out all the hardware to build this data center. And the thing with most of this company like Microsoft, like Meta, they're not actually financing this. They take out loan from the banks, from the private credit, and essentially this risk of AI is carried by this banking, right? And if there's actually the AI is not going to pan out, what they're gonna do is that they're going to shut the hose so that they're not burning the money into the furnace. So the thing with Microsoft and Meta, they are money making machine where they need to deploy their cash somewhere in terms of investment, and this AI is one of the investment that they're pursuing. So If AI bubble bursts, it's not only that all of these magnificent seven companies like Nvidia going to tumble, because Nvidia has been benefiting from this AI run. However, it's also the banking that is issuing all this loan to invest for the companies to invest into AI. The banking is also going to tumble, and it might be AI is going to be dot-com bubble plus the financial crisis in 2008. Here I'm just showing you what it means when during the dot-com bubble where companies are priced to perfection. For example, here, Microsoft, in terms of the price to earning ratio over here, is trading at 69 multiple. Cisco is at 101. Time Warner over here is at 217. Oracle at 90, WorldCom at 30, and the median, when you take the median for all of this, is at 41 multiple. This is on December 1999, before the dot-com bubble burst, where the median multiple is at 41. Now flash forward to today, we're looking at Magnificent Seven companies, PE ratio trailing 12 months. Meta is trading at 23 multiple. Microsoft is trading at 26 multiple. And in my opinion, Meta and Microsoft are the only one that in this market, in this current situation, that I think is cheap. Obviously, this is not financial advice, but I've been buying Meta and Microsoft regularly recently. And Google is actually at 31, where I think this is at fair price. And Apple, Amazon, and Nvidia, they're what I consider to be more on the expensive side. However, if you look at Nvidia, where it's currently trading at 41 multiple, if you look at the growth of Nvidia, they expect it to grow at 60% this year. So when you factor that into the pack ratio, Nvidia is actually not that expensive at all. Lastly, Tesla. Tesla is one of the stock that I personally avoiding in 2026 because it's highly overpriced. But the thing with Tesla, the self-driving investment could really pay out. In terms of the median actually right now is at 35. So in my opinion, we're getting there at 41. However, if you look at Tesla, if we just get rid of that, the median actually is at 33. So what, in my opinion, what currently is happening is that we're just in the starting phase of the AI bubble. We're not currently inside the bubble, and there is not nearly enough where it's going to pop anytime soon. Lastly, if you look at Microsoft that's trading at 26 PE, and compared to the PE during the dot-com bubble, you're getting 62% discount for the stock in terms of the PE ratio. Lastly, I cannot stress enough how important this is. This is employment report. If we look at the weekly ADP job, and if you want to talk about AI bubble, if you want to talk about earnings expectation, we need to talk about job report. And recently, the job has been very, very strong. And the thing with the weekly ADP job report, it was reporting at 54,000. I think it was actually more than 54,000 jobs versus the prior at 26,000. So since the beginning of the year, the weekly ADP job report has been steadily increasing. And for the non-farm payroll actually was reported at 178,000, where the expected is 60,000. So basically the non-farm payroll is almost beat by 3x, right? So this is just basically telling us that the job market is still fine. There's no nearly enough of the indicator of the data that is telling us that the crash is coming anytime soon. However, we need to keep monitor this job report because if people has job, they will still keep spending. Not only they keep spending, if you look at the credit card balance or the car loan balance, right? It's been at all-time high. So if the job is cracking and people start losing their job, what happened is that not only that they do not have the spending power for this company to to keep growing in terms of the earning expectation. Also, what happened is that people are not going to be able to pay the credit card, and people are not going to be able to pay the car loan and the mortgage. So essentially what's happening is that, like I said earlier, if this AI bubble actually bursts where the people actually losing job, what happened is that is going to be a combination of dot-com crash plus the financial institution in 2008 crash. In conclusion, there is no indication that the stock market is too high or will fall soon. We look at the valuation, it seems like the Magnificent Seven companies are currently trading at the early cycle of the bubble. The job market is very strong. However, I would like to point out that job reports are lagging indicators. However, it is still important factor. With that being said, I personally do not see AI bubble is going to burst in 2026. If you like analysis like this, don't forget to hit the subscribe button for more analysis in the future video. And also don't forget to hit the like button. I'll see you next time.